Thanks, Doreen. I can introduce the rest. Thank you. Felix, Janos, Shun, and Cynthia. Thank you. Welcome. Welcome, everybody, to the best session of the event. I'm joined by 4 investors from early stage pre-seed through to Series B, and we're going to be talking about where they're putting their money in 2024. So I want to start with a quick game called Overrated, Underrated. I will throw out some buzzwords for this year and get you to tell me whether you think they're overrated or underrated. We'll start with one that has been talked about a lot the last 3 days, and that's generative AI. I think we might pick up on Elon Musk later. We probably should have had Spiros stay on this session. But I'll start with generative AI. Overrated or underrated? Shun, you're in the hot seat. Tell me what you think.
Overrated.
Felix?
Underrated.
Oh, division already. Cynthia?
I think overrated for now, but underrated for the future.
Janos?
Underrated.
Cynthia, I'm going to get you to explain a bit more.
I think for now, the generative AI was made for the purpose of creating all those funny pictures, nice videos. I don't think that's actually what it's really meant to be and how it can be most productive and beneficial to the whole human being. But it certainly demonstrated the capabilities of the AGI in the future, how much they can do. So obviously overrated for now if you just evaluate the value based on they can create nice videos or pictures. But if certainly underrated if it's going to change the whole production and the business, everything, basically, the human now is running.
Are any of you investing in AI startups at the moment? Just Cynthia. Felix, what were you going to say?
I mean, not necessarily specifically AI startups, but I think the fintechs we are investing in or have been investing have been using AI for either becoming more effective in their services they offer or making credit decisions, which is a very common use case, I think, yeah.
All right, next up. We're going to go to crypto, given we're back in business, I think, this year. Nikkei at an all-time high and Bitcoin is back. Overrated or underrated?
I'd say still underrated.
You have a DeFi fund, so... Yeah. Felix?
Overrated.
Well, on the contrary, I think it's underrated.
Yeah, underrated.
You're the odd one out, Felix, it seems.
Maybe I have to say it because it's off limits for us investment-wise. No, I mean, I think the blockchain is a different story, but for crypto, most use cases aside from speculating or storing value are not really there yet as far as I'm concerned.
Yeah, Shun is putting his money in this space.
Yes, so we do have a digital asset fund, not just a crypto fund, but digital asset fund. So we don't do speculative bets on crypto. We rather, similar to Felix, we look at technology on the blockchain, which includes digital assets. So from that perspective, I think that it's still underrated. There is a little bit of hype with the Bitcoin price, and it's easy to get lost with that. But there are some fundamental use cases being built on different chains, and especially I think from smart contracts to staking to actually, if we look at the Web3 world, there are kind of glimpses of use cases. So adding all of that, I think we're still in the early innings, but I would still think that a lot of people think that it's underrated.
Janos?
So for me, I think that the recent move that you have in the market is going to give another spark of people to look into it. And if you don't have the rigor to be willing, I would have said it's totally overrated up until recently, but I think as the market re-picks up, you're going to have 4, 5, 10, 12, you don't need a lot of people to transform an industry. I think it's going to bring people back to look at it one more time. And it's important to go back into the pitch deck that you receive and go, let me look at it brand new. Let me remove all the things that I've understood. So it's important to refresh yourself whenever there's a new cycle. And clearly there now is because there's a new frenzy. But I think it's worth resetting yourself. So that's why I'm saying underrated, so that it forces you to look at it one more time.
The next one I'm going to choose, I am genuinely interested to hear your views on. I think Ravi Menon opened the day on Monday, the first day of the festival, talking about quantum computing and the likely impact of quantum in financial services. It feels to me quite far out when we're talking about early stage investment, but I'd love to hear your views. Janos, I'm going to go back to front. So quantum, overrated or underrated?
Overrated.
Wow. Cynthia?
I think overrated as well.
Rated.
Neutral.
I'm also neutral on this because it's a little bit far out, so it's difficult to make the decision right now.
Then Cynthia, tell us why you think it's overrated.
Well, I didn't mean that this technology won't, fly high in the future. But if you're looking from the investor perspective, I think that's still a long way to see if this will be the solution for a lot of problems they are, posting. They believe this can solve. I think at least when we track a lot of quantum computing startups, which were set up like 5 or 6 years ago, I think there's still a long way to really see the applications happen in the real world. So I think even before the quantum computing can really, make any big buzz, probably the energy revolution will be, the next big thing. That's, of course, in my mind.
Which is interesting given you focus on deep tech, right? So to think it's overrated in deep tech, that's a...
I think only from the valuation perspective, okay? Not necessarily the potential of technology, but if you look at how much, price tag you put on and in terms of the commercialization possibilities, I think there's a little bit of mismatch in my perspective.
Do you agree, Janos?
I was looking at it differently. So, you said quantum computing in finance. And so I don't see it yet. I mean, there's loads of things in technology and finance that we need to get through. AI in finance is immediate in terms of education, but quantum computing, it really feels you're trying to fit that huge boat into something quite small that is not ready for it. So that's to me the gap. I think quantum computing in itself incredible, but quantum computing in finance, you look at back fintech 10 years ago, it's like you go to your banker, what is fintech? I don't understand. You go to your banker now, what is quantum computing? So when do you want it? And that's where I think it's overrated. It's a cool board discussion, but then bring it back into the organization to use it. I think we're not there. I think Gen AI starts to be there, right? That it's Gen AI implementation in finance is a question of laziness. People in the bank needs to go, you know what, I'm going to spend 10, 20, 30 minutes, play around, learn it. Quantum computing, there's a level of distribution in the organization that you don't have yet. That's why.
There's a nodding and kind of agreement across the panel, I think, now.
I think it's also similar to the Gen AI-based models where with quantum computing, you really need a lot of capital. And so it's probably some of the bigger corporates that are going to push the boundaries. And I've been in discussions where some of the large information technology companies are actually thinking about anti-quantum. And when quantum is basically used for hacking, basically the receiving end should also be prepared to counter that with quantum computing. And so those are starting not with startups, but actually with large corporates. I think we're going to keep on seeing them until, Janos's point, there's actual applications to use quantum computing. But I think it's still kind of on the horizon.
All right, next one. Reaching unicorn status, becoming a unicorn. Do you think it's overrated or underrated? Becoming a unicorn, reaching unicorn status for a startup founder. Shun?
For a startup founder? That's a difficult question. Underrated?
I mean, I think it depends on if it's just on paper or if it's realized unicorn status through an exit. So if it's just on paper, probably overrated. And if it's realized, if it's a real unicorn status, I think it's, not necessarily underrated. And I don't had the pleasure of having this feeling, so I don't know what it feels like, but I think it's a great feeling, yeah.
I'm not even sure we're still using unicorns. That's, good terms. I think there are a lot of talk about unicorns actually in the past 2 years. I I mean, especially in the past market correction, I think people don't really talk about valuation anymore. Even from investor and founders' perspective, I think we were talking about, okay, what's your AR? Are you reaching 100 million AR? I mean, that's definitely a bar to hit. And are you growing over profit, or are you growing over, expanding and then burning? So I think the growth quality is much more important than any so-called unicorn. And I also want all the founders to know this is a marathon. I mean, it's not gonna, I hit one, the so-called unicorn status. That's the end of the game. That's still a long way to go. So at least in my circle, I think people less talk about unicorn or have that money compared with before.
Overrated. It depends on term sheets, right? You can be a unicorn, but depending on term sheet, how you have this. And I don't think it's the game anymore. There was the name of the game, which was, let's reach it. I don't think it's the game anymore. So I think now people are playing another game. And they're not trying to play the game of catching. But if I had to say, it's overrated now.
I asked that question because we had Vijay Sharma speak yesterday, the founder of Paytm. And he spoke about, or he was asked a question, when you became a billionaire, what did it feel like? And he just said it's not about the money. It's about trying to change the world and change, the bank account doesn't make a difference. It's easier to say that when you're sitting on billions of dollars, but it's a nice one. Nice comment, at least. All right. I think this will be my last one. Dry powder in 2024. Is there any or is there not? Maybe I'll change my overrated, underrated. Is there or is there not dry powder?
The question is whether there is dry powder or underrated, overrated.
Is or not?
There is, but I think it's selective dry powder.
Selective, okay.
Yeah, fully agree. I mean, for example, in our case, we have a mandate to invest in emerging markets globally, and that does not depend on the macroeconomic situation. Last year we did as DG, as whole organization, a record year of nearly 2 billion new commitments in total. And I think we will continue on this trajectory. So, of course, we are selective. We have been and we will be. But the dry powder is there. And also from the funds we invest in, we see that there is enough dry powder.
Dry powder, where is it? I think it's actually really different from market to market. Some market, there are a lot of dry powders, and some market is training. As particularly US and India, I mean, those are like really hot cake markets, and people, you can really see a lot of dry powders. But you still see there's a hurdle, particularly in Asia markets. A lot of dry powders, GPs raise, and even there are a lot of deployment happen as well. But we still not see a good quality exit for so far. I think that's going to be the way we have. This is going to be the hurdle in the middle of the way for the future. How to really create a positive return for LPs for all the dry powders you deploy.
So there is some now, but if anything, it might be drying up. If we're not seeing more exits come, it's not going to be returned. I know we were all kind of interested to hear Felix's view there as the LP at the table.
Yeah, no, I fully agree. I think that's exactly right. I mean, especially the whole asset class of VC in again, our markets are emerging markets. And there has been a first wave. I mean, depending on the continent, these waves came in different cycles and are differently pronounced. But currently, of course, there is unfortunately no wave of exit. So I think at the latest in the midterm, obviously this has to change to really prove out the asset class for the long term and make sure that the dry powder is there for the long term.
So then, Janos, what advice would you give to founders in the room today? If we're saying that there's kind of some cautiousness, there's maybe not as much money available, it is there, but it's harder. What should founders do to prepare for that?
I mean, there is two things, which is when you look at fundraising, you have dry powder to deploy, right? You have cash to deploy, and then you have the founders raising, and then you have the statistic, which is 99% of founders won't raise. I'm not talking about success. I'm talking that fundraising is the game for the 1%. And you have that 1% that can raise, and you have that 99% that doesn't. And then for the 1% that are looking at raising, they have an issue. And I think it's right now you need to be comfortable on where does the market clear. The point is, it's a question of valuation. A lot of founders and investors, it's not that I don't want to invest. It's like it's too high or it's too low. And the way I'm looking at it is, let's say you had me doing a startup. It can be any startup out there, right? Let's say I'm raising at a valuation of $100. I'll close my round, or if anything, I can get acquired for $100 instantly by the time I exit that door. And I don't need to say anything, right? You'll buy all the shares of a $100 company. If I say I'm raising $100 million, or if I'm doing, a Sam Altman raising a 7 trillion round, that's going to take more time. So I think for founders is be willing to see where you want to clear your round. And I think that's a very important concept, especially when you pre-seed and seed. Don't take it personally. It just means that what you think you're worth is not what the other person are. But I can guarantee you, whatever company you build, if at one point you bring your valuation low enough, you'll get someone paying. Now, it doesn't mean that it's the capital you need for it, but I think it's a very important concept that founders forgot, which is at one point the market clears, and if you bring it down, at one point someone will meet you. But you need to keep on looking, and then the question is whether the dilution is worth it. But that's an important concept that people forgot, especially if they do quick tactical round.
Shun, what's the advice you're giving to your portfolio?
It's still don't step on the gas. It's still go for profitability, or at least have a strategy to do so in the near term, because it is we don't necessarily feel that the funding kind of environment has improved from last year. But having said that, I think since we're in Japan, and I'm sure that people have been talking about this, but the Japanese government is implementing a lot of policy, and so hopefully the dry powder environment overall to GPs would probably improve. The likes of GPIF, the large pension fund, allocating to Globus, which is one of the local VCs, that hadn't been done before, and so at least there's going to be some institutional LP money from Japanese public institutions who are mandated by the government to do so, which will trickle down. So it's true that I totally agree, and I stick to my comment of money being still selective, but at least the overall environment for Japan, I'm rather optimistic. Just wanted to.
It goes to your point, Cynthia, that it's different depending on which region you're in, perhaps. You were saying backstage that the portfolio or the companies you're working with, there's a renewed interest in Japan. Perhaps you could share a bit more about that.
Yes, sure. I think because we are based in Singapore, and the thesis we are trying to build together with Singapore is that we use Singapore as the launch pad to go to the global markets. And if you look at the market, particularly for the B2B solutions we're looking into, Japan definitely is one of the largest IT spending country across the world. And we do see what we heard, in the past several days here, that Japan is really adopting digitalization, and the SMEs are picking up. So we definitely see from the willingness to pay, capabilities to pay, and also the large network those Japanese companies operate globally have a very strong attractiveness to the deep tech companies who can apply their solutions to the existing business of all this Japan market or even their overseas market. So they're very much looking to getting to Japan, but also they understand Japan is not an easy to understand market in the past. So we very much appreciate this kind of opportunity to get in touch with the local stakeholders and customers to understand what really Japan's customers and investors are looking for, and how we can marry such a growing market with the a very solid solution and the technology capabilities together to create a super return.
So there is some dry powder, perhaps more in Japan than in other markets. So if a founder is in the point where they actually have multiple VCs that they're talking to, they have lots of offers on the table, how is it that you as an investor actually differentiate yourself from other investors? So I'm going to take Janos as the founder of this panel, and these three investors. Imagine you're pitching to Janos why he should take your money just to get the kind of understanding of each of your funds and your positioning. And then Janos, I'm going to ask you to say who you'd select at the end. Who wants to go first? Who's going to be my first victim? Felix, I saw your hand go up there. Do you want to start us off?
Sure. Yeah. I mean, this is geared, towards a fintech company. You would, I think, need to see what kind of investors you want to have on the table, and ideally, from my perspective, it's kind of a mix. Everyone brings something else to the table. Our strength is that we have, as KfW, a global bank brand. So we are from the sector. We have been investing in financial institutions for 60 years. And this has been in the traditional sector through equity, through debt. We have basically built up the expertise here. And over the last 5 to 6 years, we have increasingly invested into fintechs and basically started to connect those traditional financial institutions with the fintechs that are in our portfolio, because usually what we see, it's around cooperation one way or the other. So this is why we are different. And since we do this from the balance sheet of the bank, we have some more flexibility in terms of capital availability and holding periods also, again, when times are a bit tougher.
Victim number 2, Shun.
So pleasure meeting you. Fantastic deck. So the reason why I think you should team up with us is because White Star Capital is a global fund. And so we have offices in London, Paris, Guernsey, Montreal, Toronto, New York, Singapore, and Japan. I'm in Japan. We also have presence in Middle East. And so we support your growth. And we've been doing this for the last 10 years. We usually lead. We don't have a spread and pray strategy. So each fund, the portfolio number is almost capped at around 20. And so we will kind of support you in the future rounds as well. We also co-invest with a lot of global VCs. And so I think in tough times, it's really important to have a lot of capital around the table. And so we're hands-on as an investor. And you can call any of our portfolio company founders, and they would say that.
And victim number 3, Cynthia.
Well, pressure side. I just say one thing. Do you trust me? Yeah, I think, I don't want to, everybody's an excellent investor. They all have their values. But before I came to this stage, I was upstairs in a round table. I think I just would share one thing over there. It's actually, it really need to be in the same team with the founder, because there are so many things to navigate along the way, no matter how smart you are, no matter how brilliant you are. And we are ready to be there because we have undergone that circle, and we know your pain points. And I think I got to be a good listener if you want to talk.
A round of applause for the VCs. I should say, I gave them no warning we were going to do that. That was on the spot. So thank you for being good sports. And before I get Janos to share his feedback and his decision, I will turn to audience Q&A after that. So if you've got any questions about, why you should take their money, any questions about investment or tech for 2024, get them ready now. Janos, over to you. Drum roll.
So I have an answer. So I won't go. I'm happy to take money from everyone and then diversify it around. But so I'll give an answer. But before, it's an interesting one that you asked, Rebecca, because there is a notion of what is a VC and how people perceive VCs, right? And so at least in the European context, 80% of VCs think they add value, and 80% of founders disagree once they have taken the round from the VCs. So there's a little bit of I'm going to be dating, you're going to be dating, I'm going to be wearing a nice dress, you're going to wear a nice suit. And then it's a bit like a marriage, which is once you get the investment, you stop wearing the dress and the suit, and it starts to be pajamas, and you don't talk to your investor anymore. So that's the reality, just like in relationships. But today, I think it's a real problem for VCs, because VCs have a necessity to be able to differentiate themselves. What you had before was being the largest VC in town was your differentiator. And then you start realizing that everyone had a big fund because there was money flowing around. And now the question became, do you have an ecosystem? Do you have a capacity of acceleration? Do you have distribution, or do you have a global office that can co-lead? And so VC have a real issue, which is how do you differentiate yourself, and how is that differentiation accepted by the founders? So I'm just saying this because at the end of the day, again, a VC deploys other people's money and other people's idea. So it's a cash deployment exercise. And the question is, where is really the differentiation? Because if there's a lot of cash, there is. So if I was a fintech founder, because on the fintech's hub, essentially I would have taken the money from Felix for one reason, is today fintech, I mean, if you look at verticals, it's a race between innovation and distribution. So the early stage founders, they have the innovation, they try to get the distribution very quickly. And once they have the distribution, they have sufficient velocity, they have sufficient gravity, they take off, they survive the IPO, they're okay. Or the IPO and they crash, but they have enough gravitas to be able to continue. And on the banking side, the game is innovation. They have the distribution, but the question is, can they quickly enough innovate to then use their network of branches, scale, brand, customer base to be able to deploy that? And I think today, unfortunately, in the context of fintech, startups don't have a place anymore. I know it sounds extreme to say that, but 7-8 years ago, there was a real game for the startups to gain that distribution. But today, banks have done a very, very decent job. They have understood mainly the innovation side of it. They have the distribution. So if I'm a founder, the first thing that I want to do is getting the salary of a bank, having the distribution of the bank, do the innovation, and then distribute across, because I won't be able to fight on customer acquisition the way that I could have done 7 years ago. So if I was a fintech founder, I would have gone with Felix because I'd go, this is just my path to distribution, and I would negotiate the term sheet to make sure that this is possible. That's the way I would have done it.
Interesting. I also would have gone for Felix, but for a different reason. Sorry, guys. Just the way you talked about long-term capital, and as an impact investor, the horizon is slightly different. Gives me a bit longer to fail along the way and fix it, and still be wearing a suit rather than pajamas. So,
or you have an acqui-hire plan in one of the bank distributions. So I think it's just a different game right now. And in fintech now, you just want to secure distribution as quickly as you can.
If I may add on that, because that's actually customer access is one of the most important acceleration capabilities we are trying to plug in. But I have to do a little complaints here to our financial institutions, especially established ones. Even though you're talking about you want to embrace the innovations, but a lot of times when even our portfolio is successful, the POCs where make to your CTOs, but in the end of the day, I think it's still very slow from the take of the innovations. And the second, a lot of times all those solutions actually end up in the system integration providers' hands instead of directly deployed by the banks. So I should try to make a small complaint on behalf of my portfolio, because we work very closely with MAS and also all the banks in Singapore. We actually know the pain. Even your global banks, there's still something we can do much better than just claim you have a network or customer access.
No, of course, and I didn't say it was easy. I think it's a kind of a mid to long term play, and it depends, of course, in the region and in the market, and how strong are the pull factors there, and how much the bank also need to innovate from a market perspective.
A defense, Cynthia, I love it. Thank you for rebutting that. Shun, I should give you a moment to say a few words, given that we didn't vote for you in that round. I'm sorry about that. Defend yourself.
Oh, no. It's really the founder's choice, and so we respect that. But basically, whenever you start your next one, we hope that you'll consider us.
I mean, I do have a bias, which is, and Naveen knows, and I talked about it before. I do think if you're a fund or if you're an emerging fund manager and you want to differentiate yourself, founders' mental health is, for second, third time founder, which are more successful, it's something critically aware for them. And for new founders, they don't know what they don't know, but you want to de-risk your portfolio and have that. And today there is 5 funds really doing it. So that would be a pretty straightforward differentiator. If it's a second round you're raising as a founder, you went through a lot of difficulty, you hear this, it's like someone is helping me. And if you're a second-time founder, you go, actually, what personality does matter, and that's how it shines. So that would be the new.
Nice. We have time, I think, for one question from the audience, if there is any. I see a hand at the back there, in the middle. Before we answer, just a show of hands, did everyone hear that question? If you didn't hear the question, please raise your hand and I'll repeat it. Yes, at the back. How do you define an AI startup? Basically, every startup claims to be an AI startup, or there's some version of AI in the sector that they're operating in. So what is an AI startup? How do you define it for your investment thesis, I guess? Who wants to take a stab at that?
I'll take a stab. It's magic. So I know it's not a technical definition of it. It's a bit like how you have a magnet in a box and you go, oh, wow, this is incredible how it works. AI startups that works well, it's just magical. You go like, how did this happen that quickly? So that's to me the definition. It's a bit like a market fit. You feel it. It's a weird thing. So I wouldn't go, I have a PhD, understand AI, etc. Is if it feels like magic, now do your due diligence, because then you might have issues. But an AI startup that works incredibly well is magical. So that's the definition I would have. AI startup is magic.
Wow, there you go. Thank you very much to our panel today. That's all we've got time for. Thank you.
Thank you.
Thank you.